Good afternoon, everybody, and welcome or welcome back, as the case may be, to the CPE webinar. It's Accrual World. It certainly is. Again, my name is Sam Lester of the Office of University Controller, and I am pleased to be here with Leila McCamey from the Boulder Controller's Office. Leila, how you doing?
Doing awesome.
Before we get started on this webinar, a couple quick housekeeping things. There is a chat function at the bottom of Zoom. Feel free to throw out questions throughout the course of the webinar. We'll try to address them as best we can. If we can't get to anything because of time constraints, we will collect those, get the questions to Leila. She can give us the answers later. We'll post them with the Q&A, as well as the webinar recording. The handout from the previous session, if you were on there, that's the fiscal year end timeline, and the course evaluations. All will be provided in a link to you by the end of the week. We do have poll questions throughout the course of this webinar to keep you engaged and involved. And a reminder to any CPAs in the audience, you must answer all the poll questions and attend the webinar in its entirety in order to get your CPE credit. On that, let's go ahead and get started with a poll question to give you an idea as to how it works. So, which of these four statements best describes you? What is an accrual? I've processed a few, but I didn't quite understand them. I'm experienced, but I could always use a refresher. Or I am a pro, and I'm only here for the CPE credit. Let's give some time here for audience members to answer.
It's nice to know we have some people here just for the credit.
That's nice. You know, it's the honest answer.
That way.
Actually, in any case, what's an accrual? Anybody that answers that, it's honest. You know, it's what you're here for, to learn.
Yep.
So why not? Let's go ahead and let those roll in here. And then we can go ahead and end polling. Share results. Looks like we have about 40% of the audience members saying that they are experienced, but they could use a refresher.
Very cool.
Very cool. We'll go ahead.
So we have some people, though, who are saying, what's an accrual? And that is a fair question. We'll answer that today. So we're going to answer not only what is an accrual, we're going to tell you why accruals are necessary, what types of things get accrued. Sometimes we even reverse them. So what's even the point? And well, what happens if we just ignore things and we don't accrue? Are there any consequences? We'll also talk about the resources throughout and what's available for you throughout this process. So the term accrual is used in a couple of different contexts. Let's start with the accrual basis of accounting. This is kind of the proper noun context, if you will. So the accrual basis is a requirement for financial statements that are prepared in accordance with GAAP, or generally accepted accounting principles, which our financial statements are. The accrual basis is about recording transactions when they occur, irrespective of when the actual cash is received or paid. So it decouples the actual activity that that transaction represents versus the cash that goes along with it. It records when the revenues are earned, and when the government has the right to receive the revenue, and government, in our case, us. It also records expenses when they are incurred. The matching principle within accounting also tells us that we want to place revenues and expenses in the same period, which is really the fiscal year, is what we're talking about with that. And by doing this, we can demonstrate the performance and the position of an organization much more clearly. We can give a very clear picture of what happens and an organization's financial health. Accruals are also end-of-period adjustments. Typically, we make them at the end of the fiscal year. Sometimes, though, we're making accruals on a quarterly basis, and so kind of using that quarter end as sort of a period within our fiscal year. They are just journal entries. They record revenue or expense, and then the related receivable or payable associated with that. And a lot of our accruals are reversed because we have normal procurement processes that continue. So if you think about a procurement card expense, for example, the only way to remove that expense, that charge from Concur and get it into the finance system is by assigning it to an expense report. So even though we might accrue that expense, we still need an expense report to move that transaction through and off the cardholder's statement. And so to the extent that we can, we allow our normal procurement processes to occur, which is sometimes why we need to reverse them. Let's take an example of accrual accounting versus cash basis of accounting. And these are the two main types, the two main bases of accounting, cash and accrual. So in this example, we're talking about revenue. A barbershop cuts hair, $10 a head. So we have 5 people come in today, and on the cash basis, 4 of them paid. So we've got $10 times 4 people, we have $40. So in the cash basis of accounting, we're going to record $40 in cash and $40 in revenue. Well, yeah, we cut 4 heads of hair. We actually cut 5 though, so it's a bit of an incomplete picture there. Versus the accrual basis of accounting, where we record that $40 in cash, because that's the cash we have today. We cut 5 heads of hair though, $50 worth of revenue. That difference of $10 is that somebody still owes us money. And when that person pays, then we'll record it against accounts receivable. Now, which one is the more complete picture of what actually occurred? It's the accrual basis, isn't it? It says 5 people came in, 4 people paid me, 1 person was my deadbeat cousin who didn't.
All things considered, a pretty reasonable price for a haircut these days as well.
Well, yes. So some of the types of accruals that we have here at CU, we have some automated accruals, which are some of our marketplace items. We have some Concur items, the procurement card in particular, that is accrued. And we have biweekly payroll that is also accrued from the HCM system. And automated is in quotation marks here because there is actually a lot of manual work that goes into these accruals. It just depends who you are as to whether you feel the automation or not. Departments will feel like these are automated and people at the OUC will feel like they are not. So it really just depends where you sit with those. On the manual accrual side of things, a lot of the types of accruals that we tend to see are for subawards, where you have a subcontractor and you need to know how much expenses they have incurred prior to June 30th so that we can put that expense into the system if we don't have an invoice for it. Also, if there are any SPOs for goods or services that have been received but not yet invoiced. So those would be accrued. Travel card expenses may also be accrued. Now this is something that departments, this is a bit more of a judgment call on the travel card expenses. Number one, did the travel actually occur this fiscal year? If not, leave it alone. It will end up in next fiscal year and that's fine. If it is in this fiscal year, then the department can make a judgment call of whether or not that travel was significant to their operations. Now, I hesitate to say it's immaterial, so don't record it, because if everybody says something is immaterial, then we eventually get a material amount in aggregate. So I want to be real careful about that, but that's something that is a judgment call by the departments. And then some of the other kind of higher level types of accruals that we do manually are OPEB or compensated absences, net pension liability. So that's either campus or the system, the OUC, that records those. And each accrual is a little bit different for each department. So just keeping in mind significance to the department for whether or not something should be accrued on those manual ones. So some of our accruals are entered in, then they're reversed. And we talked about this a little bit earlier with the procurement card example, that transaction. And we reverse them because we want to avoid double counting of expenses. So if we think about that procurement card transaction, it is accrued into this fiscal year. For whatever reason, it gets picked up as an accrual. So it's an expense in this fiscal year. Then when the expense report is created, submitted, and approved, then that expense gets recorded in next fiscal year. So now we have 2 expenses. One of them needs to be reversed in order to only have one expense in the system. So we're not double counting from between last year and this year. And so that's where that normal transaction cycle takes effect and actually does that double counting. If we don't reverse, that is. Now, non-accruals are reversed. So some of the manual accruals that were on the slide previous, like the OPEB or the net pension liability kinds of things, those are ones where we will record an incremental increase to the liability, for example. And so we don't reverse the original journal entry. We just keep adding on to that liability. And so we don't need to reverse it. But also too, for example, revenue is another accrual that you may accrue revenue and the related accounts receivable, but you don't necessarily need to reverse it, because when that deposit or when that payment gets made, accounts receivable is actually the recommended place to actually deposit that check. And so that's where recording revenue and accounts receivable doesn't need to be reversed, but it does need to be recorded. And so it's also an accrual. Accruals are not encumbrances, and encumbrances do not create accruals, okay? Because encumbrances are things that we owe for a future good or service. So it's a future commitment. And they're also not used to budget or reconcile to budget. So recording an expense just to use up your budget is not good practice. Let's not do that. Let's just do a BJE to adjust your budget to what it should be. Right? So accruals also, they must be supportable. I mean, what we talked about earlier, accruals are journal entries. Every journal entry needs to be supportable. Now, a lot of times accruals are estimates. So how do you support an estimate? So you might have the actual invoice. So at that point, you can use to the dollars and cents for that accrual journal entry. You may also have an estimate. So you could have an email from a vendor that says, yeah, we estimate we're going to bill you X number of dollars. Or you could have a methodology that says this is how much we expect. It's a reasonable methodology. You could do it on head count. You could do it on minutes. You could do any sort of calculation as long as it's reasonable and you can justify it. It makes sense. And so accruals simply need to be supportable. And if you are doing an accrual, I highly suggest utilizing the attachment function on your journal entry, because that's the best place to put that methodology. Put it in a spreadsheet, upload it with your journal entry, and that way we can very clearly see, why did you pick this dollar amount? Let's do an example. So we have an order that got placed. John placed an order for $100 called supplies on June 24th. The delivery was made on June 28th. The invoice was then received and entered on July 9th, and payment was made on July 11th. Fiscal year end, of course, is June 30th. So the expense was incurred when?
June 28th.
June 28th. And it was paid on July 11th. So we've got this period of time, and it crosses the fiscal year. So what do we do with it? Well, let's walk through the related journal entries that are going to go with these actions. So the first one is July 9th. All of our normal processes, July 9th is the first one that's going to hit the general ledger. And we are going to debit supplies and credit accounts payable. That's going to happen within marketplace, normal processes. And then on July 11th, that payment gets made where we debit accounts payable, credit cash. Okay? Again, normal process, ignoring the whole net 30 normal part of the process. Okay? So at this point, we have expense, we have cash out the door. This is good, right? But it doesn't really paint the picture of what actually happened. At any other time of the year, this might be fine. But because we're at fiscal year end, we want to make sure that this picture is as clear as it can be. So we know that the underlying expense was actually incurred in June, right? And so we can accrue that expense. And we accrue it by debiting supplies expense, crediting accounts payable. But wait a minute. We have an expense in June and we have an expense in July. Whatever shall we do, Sam?
We're going to
reverse it.
We're
Right?
going to reverse it.
So we're going to reverse one of these. And in this particular case, it will reverse on July 1st, which is effectively reversing our June 30th accrual with accounts payable and supplies expense. And so let's then kind of talk about the net effect of what's going on here. What is it that zeroes out? So we're looking at supplies expense that zero each other out. We then have accounts payable that zero each other out. And we are left with supplies in June and cash in July. And now we only have one expense in June. And that is what really paints the picture of the activity that occurred. Now, there are a lot of transactions that went on in there. But it's one of those things where accruals, I feel like, are very intimidating up front because there are a lot of transactions that go on with these, and ins and outs and arounds. And if you make a mistake, then you have to accrue it with a correction, and it can get very complicated. But really, if you stop and walk through each of the steps and what happens where and what should happen where, I feel like it's a very logical process. And so most people can just logic their way through it. And if this totally confused you, contact your area accountant or contact FinPro Help.
Yep, we can work with it.
Okay. We have another example here. So we're going to talk about subawards for just a moment here. So it's June 25th. A department received an invoice from its subcontractor on a research award for May expenses. The timing of the monthly invoice is usually consistent, so we can expect our invoice for June expenses to be received late in July. Fiscal year end again is June 30th. So I think we have a poll question associated with how should June's expenses be recorded?
Let's go ahead and launch that there. So how are we going to record June subaward expenses? Contact the subawardee for an estimated invoice. Calculate and accrue the average monthly expense. Wait till we get June's invoice and then make a decision. Or do nothing, it's immaterial. What do we think? What do we think? Got a lot of good attendance, participation coming in here. Majority of people voting for, and I'm looking for a couple people to say do nothing, it's immaterial,
Yep.
just for the sake of entertainment, but it looks like we're getting a lot of other answers here. Give it another couple seconds here. All right, we've got good participation. I'm going to go ahead and end the poll here and share the results. I think we are going to contact that subawardee for an estimated invoice, just followed by accruing the average monthly expenses after calculation.
Awesome. And you know what? That's great. I mean, that is in order of what should I do? I would say that is the best way to approach it in most cases. However, I would say if you responded to any of these four, there's actually an argument to be made. So the first one, let's talk about a few of these. The first one, contact the subawardee for an estimated invoice. That is the one where you are going to get the best estimate of expenses. You are going to get an accrual, or an email from your external source. So get it in writing. That's the best way to do this, which you can then upload to your journal entry to support that dollar amount. That is probably the top of the list. Now, that being said, if your subawardee is pretty consistent in their spending, and it's, if it's always, say, between $600 and $1,000 each month, you could simply average those monthly expenses very reasonably and enter an amount for that month of June. Perfectly fine. Waiting until receiving June's invoice, then deciding, is, well, not for the risk averse. Let's put it that way. If you like to live dangerously, you could do this. However, there's a cutoff. In this particular instance, because we expect our June invoice to be received at the end of July, it's after all of our cutoffs and all of our closes for fiscal year end. And so in this particular case, not the best option. However, if you were to expect that invoice to be received the first week of July, that's a different story, because then you have something to substantiate that accrual. And so, I could see an argument for that, but only for those who like to take risks and can remember that they're taking a risk, so they book something beforehand. And doing nothing, it's immaterial. Well, again, if everybody says it's immaterial, then we would get material amounts somewhere. So I don't really go for that one. Now, there is another option with this that was really tough to put into an answer format. So what if last year, maybe you weren't here last year, and somebody else forgot to do the accrual for June. And so June's invoice actually ended up in July. Then we have July and August and September and October and all the way through May. And so if we accrue June of this year, what does that then do? That gives us 13 months of expenses in a fiscal year. Mm-hmm. And so really what we're looking for is 12 months of expenses to be captured in the general ledger. And so if you already have 12 months, that is where do nothing is okay, but not because it's immaterial, because you already have 12 months worth of expenses.
That's good. Validating all four answers. We'll go ahead and get to the next slide here.
So if you need to do a manual accrual, so in the instance of this example, how do you do that? What are the things that you need to know? We have historically used a particular naming convention on our accruals, and that's to use a JE ID of ACC. So it just has to start with ACC. And then also using a June 30th date. Okay. Now, excuse me.
Bless you.
I've seen in a couple of publications ACC versus ACC dash. To clear up the record, we did ask Cal Anderson, who is our person who does the query about this, and ACC is what he queries on. So the dash is certainly optional if you've seen that published out there, because I know it's out in certain publications. So using ACC to start your journal ID and the 6/30 date will then very clearly show that this is an accrual entry, okay? Because they're end of period adjustments. Just a quick note here, periods 996 and 997 are adjusting entries, and I just want you to keep that in the back of your mind for our next slide. That will make a bit more sense. Now, that's how accruals are created, with that ACC and that June 30th date. You can set journal entries to auto-reverse. And in that case, it will automatically reverse on a 7/1 date without you doing anything additional. Okay? Now, if you forget to set auto-reverse and you have used this ACC with the 6/30 date, the OUC will query all of those journals and they will reverse it for you. And that actually happens after third close, so it's later in the month of July when those post, but it will still post with a July 1st date. And so that's the actual mechanism of a manual accrual. Let's take a look at what it looks like on a journal entry itself. So you can see the first box that comes up is our journal ID. ACC is what it starts with. And then we have our date of June 30th. Next, let's take a look at the adjusting entry. Period 12 is a regular non-adjusting period. It's just one of our periods 1 through 12, regular plain old June. Okay. Periods 996, 997, and 998, if you were to use that, are considered to be adjusting periods. And therefore, if you were to be doing an accrual or any journal entry for that matter in periods 996 or 997, the system should automatically default to this, but in case it doesn't, just know it should be an adjusting entry if in those periods. And so that's what this is talking to. The next item is our reversal option. And this is one that most of the time during the year, I totally forget that this option exists. It just, I use attachments more often than I do reversals. But if you click on that blue wording, the default itself is reversal. Do not generate a reversal, which is why it's so easy to forget that this option exists. But you do have the option of reversing it at the beginning of the next period yourself. And so if you don't want to use the ACC and the June 30th convention, perfectly fine. You don't have to. This is just a kind of this business process that we've grown accustomed to. You don't have to do it. If you do want that journal entry to reverse itself, though, you need to pick beginning of next period as the reversal option. And that means, so if you're creating it in period 12, your next period is actually period 1 because it's referring to the beginning of the next non-adjusting period. And so those are the two main options that I would go with. The other options are less frequently used. So that's what it looks like on a journal entry. Keep in mind, if you guys have questions, feel free to ask them through the chat feature as we get to them.
We did have one from Julia.
Okay.
What is the last day that suppliers submitted invoices will be processed for fiscal year 19? I do not have the calendar in front of me, which is my secret weapon.
I think we are going to sort of get to that. However, supplier submitted invoices. So supplier submitted invoices.
I think we've just recently passed the submission deadline for ensuring payment in fiscal year 19.
I think that was last Friday.
Friday.
Yep. But then supplier submitted invoices, as long as they match a PO or an SPO, will be then accrued. And so I believe through July 3rd is going to be the deadline.
That sounds accurate. Julia, if you don't mind, I will double confirm that and reach out to you via email. And thank you for your question.
And also on the OUC's website, and we'll look at that at the end of the slide deck, there are also some really excellent resources for those types of things on the fiscal year end webpage too.
Just for reference, it's cu.edu/controller. And then there is a calendar where you can go and actually get the Excel format calendar that shows every last deadline that's pertinent to fiscal year end. So we'll reach out with that, Julia. Thank you again.
So we've got automated accruals to come up next. So we just talked about the manual accrual. So if you have an expense that you know needs to be entered and there's no other mechanism for entering it, then a manual accrual is the way to go with that. Automated accruals will catch a lot of these items that are coming through from Marketplace or from Procurement Card, and we'll talk about specifically which ones those are. But you may also need to just kind of keep an eye on your financials. Did everything get accrued that you expected to be accrued? So if you expect the supplier to send the invoice and they don't, or they don't make the deadline, for example, that could actually turn into a manual accrual. So to Julia's question there. So the automated accruals that we're talking about are specifically for Marketplace and Concur. So in Marketplace, these are the supplier invoices. So we're including the PO and SPO invoices and payment vouchers. And those are going to get accrued with a journal ID of ACC, AP, MKT. The actual date of that accrual, it will post on July 9th, the accrual itself. But those are for items that have missed the cutoff date of the 14th. So we've already missed the cutoff date on that. But you know what? The PSC is still processing paperwork. So if you have an invoice, keep sending it in because that's how they know that it needs to be accrued as well.
Business as usual. It doesn't shut down.
Not yet. Now, that being said, if you've got an invoice and it applies to next year,
shut down.
Shut down. Please hold that until after first close. So also one of our automated accruals is going to be the procurement card. So we will accrue procurement card expenses, regardless if they're on an expense report or not, as long as they have a transaction date of June 30th or prior. And we'll get into some specific dates on these as we go through the next couple of slides. Before we move on, I do want to make a quick note where procurement card is here. I want to make a quick note of travel card, that those items are not automatically accrued. And so if you do have a travel card purchase that needs to be added into this fiscal year, that's a manual accrual. It is also kind of a judgment call on the part of the department as to whether or not it's a significant enough amount to matter. So to me, when in doubt, accrue, but I do get it. If it's $35, you could say that's insignificant and get away with it, definitely. Okay. So talking about our marketplace accruals a little bit. So earlier we were talking about the normal processes and allowing the normal processes to continue to work as much as possible. And so this is the normal process of a transaction that goes through marketplace. So the department will create the requisition and then which becomes a purchase order. The supplier will deliver the product or the service. The department is going to enter that receipt. If it's more than $10,000, the supplier invoice gets received. There's this match process that goes on. And if it is successfully matched and in payable status, it is then uploaded to PeopleSoft, debiting expense, crediting accounts payable. Now, in steps 2 and 3, that's really, step 3 in particular, is where that expense is incurred. And remember, that's upon the accrual basis of accounting. We want to record expenses when they are incurred. But we don't actually record that expense in the general ledger until it hits payable status and it's uploaded into PeopleSoft. There could be quite a bit of time where we're either waiting for receipt, waiting for an invoice, the match hasn't happened, if maybe there's a match exception that has to happen and get cleared out. There's a lot of time in there that could take place. Now, if all of these have happened prior to June 14th, last Friday, then those items will get paid and posted for FY19. Anything after that date, from the 14th through first close, which this year is July 3rd, will need to be accrued. And so that's where keep sending your paperwork in. The PSC will continue to process it, and it will be put into a queue, if you will. It's just a query, really, that then is pulled out and said, these are the items that were received after such and such a date. They did not make it into the posting and payment for FY19, so we need to accrue them. So that's the time frame between last Friday, so today, and first close. The accrual itself will post on July 9th. Those marketplace accruals will. And so you'll see them in your financial statements the 10th after all the uploads happen. Okay. Now, the next one we have here, these are for supplier invoices. Okay, I guess actually, I'm sorry. This is more the logic of what's being accrued, isn't it? The invoices and the payments, anything that has that June 30th date that matches that payable status, that enters payable status by first campus close. Now, the reason this is important, and so as I mentioned, the accrual itself for the marketplace items will post on July 9th. It'll feed into the CIW, and you'll see it on July 10th, which is a Wednesday, incidentally. Block your calendars. Running your financial statements, your financial detail, to make sure that you have everything posted that you expected to be posted as the accrual, and that nothing's missing. Okay. The reason that that's important is because the auditors will look, while they're doing field work in August and September, they will be looking at invoices that were paid in July, in August, even in September, and say, wait a minute, this has a June date on it. Was this for June work? Did it get accrued? And so they'll ask us that. And so we'll talk to the departments, and hopefully we'll be able to say, yeah, it did get accrued because the department recognized it did not enter into this, was not a part of this automated process. So they did a manual accrual for it. and we can point to that accrual. I love it when I can just point to where it actually got accrued, and we're good from the auditor's perspective. But that's why it's important to keep an eye on these items, because there's a lot that will get manually accrued, but in case something gets missed, be prepared to be able to do a manual journal entry. And that's really going to be the 10th of July is the first time you'll be able to see all of the effects of the accruals.
Quick plug for the help desk. We can help you analyze the fiscal year-end calendar to see how relevant it is to you, but we can also help you with any match exceptions. So any invoices that you have as in process and you need to get them to payable so they hit the GL, let us know. finprohelp@cu.edu. Plug over. Back to Leela.
Because we are throwing out a lot of dates here.
Yes.
And I purposefully did not put them on the slides, referring to the year-end calendar, and those tools on the OUC's website is really going to be the best place to go find all of these dates. Our next group that we're going to talk about for the automated accruals are those for Concur, and these are for the procurement card. Now, the normal process, the procurement card gets used for purchase, the bank processes those transactions, and it's imported into Concur. The transaction is then assigned to the expense report, allocated to an expense type, and allocated to the speed type. The report is then submitted. It's approved at all levels. So remember that, keeping in mind, it's not just always departmental approval required there. Sometimes, like official functions with alcohol, for example, require controller's office approval as well. And once it's approved, then it's uploaded, debit to expense, credit to accounts payable. The expense itself is incurred way back in step 1. But we don't actually record this into the general ledger until step 7. Now, for the procurement card, our date to be kind of working toward is, let's see, where did it go? Oh, here we go, is June 20th. 21st, I'm sorry, my bad. So for the procurement card, June 21st is this deadline. If your expenses, your charges in Concur are assigned to an expense report, they've been submitted, they are fully approved by close of business on the 23rd, they'll just go through their normal process, okay? Anything after that, though, will be picked up because it'll have a June date, and you'll have until July 3rd to make sure that we have an accrual in the best place that we possibly can. Now, the accrual gets needed if you have an expense that is anywhere within steps 3 through 6 for the procurement card. Now, incidentally, travel card, just a little aside on this one, travel card, June 20th is your deadline, and then keeping in mind it is not accrued, and so anything that you don't get submitted fully with the campus approval, by June 20th, you may need a manual accrual for, but that's travel card and employee reimbursements and non-employee reimbursements. So back to procurement card, there is a logic to why things are then accrued to the place they are. So if you have the procurement card expense sitting out there, we've done nothing to it, it's just sitting there, and it has a June 30th or prior date, it will be accrued to the default speed type that was assigned with that card holder, and to a default expense type or account code 552601 if there's an undefined expense type. Because we know some of our suppliers, they come through and there's just kind of this expense type that defaults based on the supplier, on the vendor. So that's if you've done nothing to the expense itself. The same thing, though, is if you just assign it to an expense report. It'll still go to the default speed type and the as defined by the expense type, or 552601 if it's undefined. And 552601 is other operating expenses. I'm not sure how much more vague one could be.
It's kind of a catch-all sometimes.
It certainly is, and it's frequently wrong. So really, the way that you can drive your procurement card expenses to being accrued in the best possible place is actually to have them assigned to an expense report, allocate them to a speed type, and assign them to an expense type, because that is how it will then be picked up for the accrual. And that's all you have to do. You don't actually have to have the expense report submitted. You don't have to have it approved. And this is all by our cutoff of first close. Now, I highly recommend, to the extent that you can, to submit and approve your expense reports, simply because then there are no changes that could be made between the time that the accrual is picked up and the time that the expense report is actually posted. And so I do definitely encourage you, to the extent that it's possible, submit your expense reports and also have them approved too. But understandably, it's a lot of work at year end, and so at least assign a speed type to it, at least get it assigned to an expense type, because then we can really control where things end up on our financial statements.
Makes sense to me. It brings us to another poll question. Go ahead and launch this here. Let's see who is paying attention. Which of the following transactions will not be automatically accrued by the deadline? Procurement card, paper forms such as payment authorization, study subject payment, or non-employee reimbursement international, or PO invoices and payment vouchers, which will not be accrued by the designated deadline. Let's see. I see percentages going down. I guess you can reverse your answer. I wasn't aware of that function in Zoom.
It kind of looks like some people should.
Well, got good participation here. The majority of people are answering. Let me give it another couple seconds here. All right, let's go ahead and end the poll and share the results. That is correct. Paper forms such as the PA, SSP, and NRI form will not be automatically accrued. So kudos to you if you answered that, and thank you everybody for participating. Let's go on to the next slide here.
What if we all say it's immaterial and we don't accrue? Well, our financial statements may be materially misstated. Our assets, our liabilities and our expenses could potentially be under-recorded. We don't like that to happen because that doesn't paint a good picture or an accurate picture of where we are as an organization. We may also have some audit adjustments and or comments. I mean, as I mentioned earlier, our auditors do look at invoices that come in after year end. So in the July, August, even September timeframe. And they are looking at those to see if they are in fact June expenses. And if they should be there, if there was that, if there was an accrual that got made to put them into June. And the more we have of those, the more potential adjustments that we make after we've already closed our books, which doesn't look good, or they make a comment or have a finding on our financial reports. And that's just not a good, that's, you know, we like having clean financials. So we like that. And then also there is the risk that they could take any error that they find it in a couple different places and say, this is a systemic error, and then extrapolate it. And it all of a sudden, a $50,000 error becomes something much, much larger. And so we want to avoid that risk as well. Now, a couple of our key dates, and we've kind of talked about a couple of these throughout the process, but I want to reiterate and bring attention to these close dates. And these are the ones we really, really drive to throughout the process. And because this is it. This is game time. Is that the right word to use?
I think so.
Okay.
I think so.
So first close, which is just period 12, our regular June close, it will be on July 3rd for campus, and then system will run that close on July 5th. Very similar to every other month-end close in that respect. Period 996 will then be opened, and it will go through that entire next week, closing for campus on July 11th and for system on July 12th. Now, let me reiterate, this particular week, if you are in a department, or even if you're at the campus level or the system level, because we have our own speed types too that we have to do, that week of second close is very critical. We have our procurement card accruals that we'll post on that Monday, on July 8th. We have the marketplace accruals that we'll post on Tuesday, July 9th. Each of those feeds overnight, so the next morning you'll be able to look at your financial statements to see what posted and what didn't. Make sure they posted to the right place. And so block off your calendars for July 10th and 11th to be making any corrections that need to be made for any of those accruals that come through or any of your last minute types of things. It's also your cutoff for PETs. So we don't allow PETs after second close. So that is, I think, probably the biggest week as part of year end as far as transactions kind of converging. And then third close is that following week. Certain campuses have departmental cutoff at second close. Other campuses allow a couple of days into third close. Check with your campus controller's office to make sure you know where you fall, depending on which campus you sit on. So those closes for July 18th and 19th for third close. And then we do have a period following third close, and this is period 998. From the campus departmental perspective, very little is expected to occur for that. We do at the controller's office and at the OUC have entries that get made during period 998. Mainly these are corrections or presentation entries so that we get our financial statements accurately stated for the year. Earlier, I mentioned the OUC's webpage for the year-end dates and such. This is it. So we have here, how to ensure posting and payment in FY19. So one of our first questions was really about those supplier invoices. That's the resource to go read to make sure that you get your supplier invoices in on time. Also then ensuring the accruals for other supplier invoices and procurement card, how to do an accrual JE. There's a video there that's very useful. And then understanding how those PO encumbrances work as far as fiscal year end goes. We don't accrue for PO encumbrances, but they do they move at fiscal year end and then they disappear and they show up next year. Why is that? That article can help understand all of that. And then at the very bottom of that page is the comprehensive year-end calendar that we've referred to a couple of times throughout this webinar that just helps us all keep on track and everybody doing what they need to do.
I think that heads back to Julia's question. That's that Excel calendar you may need for your deadlines, which I keep open all season long.
All really season long, wow.
Well,
yeah.
all fiscal year end season. So like early June to late July, it's just there. So
here are a couple other resources that you have available to you. Your campus controller's office is an excellent resource, as is the FinPro help desk.
Thank you.
Yeah, and all year round for those too. Very good. Okay. Today we've talked about a lot of stuff. There are a lot of moving parts to accruals. They're complicated, they're intimidating, but you know, once you understand the concept, you can generally logic through everything associated with them. So we've talked about the what and the why, the automatic versus the manual accruals, how an automatic accrual could actually turn into the need for a manual accrual, why we do them, how to reverse them, and possible consequences for not accruing. And then the resources, of course.
Yep, absolutely. So let's open it up for questions. We do have plenty of time here. If anybody would like to throw anything in to the chat, we are glad to address it. Adam, will the slides be sent out to those who registered?
Okay. Yeah.
I think that could be done. We'll have to confer with the powers that be, Adam, but we could probably get those up on the website. It's Leela's content, so if Leela doesn't have any problem with it, what do you think?
I think, I don't know. I think it's fine. Yeah.
Okay.
I think we'll post those to the website.
Yep, those will be up there, Adam.
Yep.
Thank you for your question. Anybody else have any questions currently? You know, one of my favorite slides in there was the one with the animations that crossed out everything in red, so that as like it became more complicated and then got crossed out, it became something nice and clean at the end.
Nice and simple.
We got a nice thank you from Janet.
Oh, thanks, Janet.
Representing the OUC. Janet, thank you for your attendance. We really appreciate it.
Well, and for everybody on the campus, thank you guys for joining us today. And well, not just on campus, but here at the OUC too. Bob, we know you're listening. And I appreciate all of the attendance and the engagement here. And Sam too, for your help with this. I mean, this is a smooth, I don't have to do anything but talk.
That's kind of how I feel, because I don't have to be the subject matter expert. I just schmooze and hit buttons. But everybody that has attended and participated in poll questions and thrown out other questions, we certainly appreciate it. Leela, thank you as always. It's a pleasure to have you here. We have learned a lot today about fiscal year end and accruals in general. So thank you so much.
You're very welcome.
Let's see. More financial classes for non-pros. I understand that.
Yeah, it's some of it's pretty tough, but we can. Yeah, well, this is fun, so we'll figure out what other classes we can do.
Yep. All right. Thanks again for your attendance, everyone. Alexandria, would you mind going back to the resource and contact page? Just
Sure.
a moment here. Here's resources. Is this what you were looking for? There may be a delay since you're in text and I'm in speech format. Yes, thank you. You're welcome.
Very good.
Okay, everybody, we're going to go ahead and end the meeting, but thank you again and have a great day. We look forward to seeing you at the next CPE webinar.